So today's session is going to be on PO high. PO high. When we say PO high, what is PO high? It simply means the point of interest. Point of interest here. That's the area we actually want to focus on. Now, if you remember when the basic market structure actually tells us that, let's say we have a bullish trend here, right? So that means we want to buy from one of these zones. But we all know that this zone is too big. So we need a specific area to actually trade from, right? That's why we also came up with this Fibonacci tool that tells us that, okay, we only focus on this zone here, not this one, right? Focus on this zone and not this one. In a bearish trend, the basic market structure also tells us that, okay, this is a bearish trend, right? That means instead of just waiting for price to come here, where exactly are we waiting for price to come to? So we also came up with this rule here, this Fibonacci rule here. Okay, we don't trade from here, we trade from here. That gives us a specific zone, but within that zone, where exactly do we now want to trade from? Do you mean I will just set my short position or just put my long position here? Do you mean this my short position here like this and have my SL this large? Is that what you mean? No. Do you mean I'll just put my long tool here and have my SL this large? No. This isn't what I meant, right? That is where POI comes in. That is where POI comes in. It basically gives you that specific zone where you expect price to come back into so you can take your trade from there, right? So in the POI, right, according to the entries as well, the POI, after the POI, it falls into two categories, right? Because we actually use the POI for entries, yeah. We enter the trades from the POIs, right? So it falls into two categories. The category A is the risk entry. B is confirmation entry. Confirmation entry. So let's start with the point of interest. So let's assume we have a bullish trend. First thing is a sweep of the previous low, yeah, then a break of structure. So we have this. So we have this. That means that this is a sweep of the previous low and this is a break of structure, right? That means this low is expected to be protected and this high as well, right? Then we have our structural liquidity, within it as well. So this low to this high, to this current high is our swing structure. And where is our structural liquidity? Transactional. This is our structural liquidity here. That means we want to trade off from this zone, but do we mean that we would also just place our entry here? Most times you don't really have to, yeah. That's where POI comes in. So I came up with the most important type of POI that I kind of like, right, that I don't do without. It's like my best kind of entry, right? And which is the so people call it support and resistance, but it's not. When it comes to mixing it with how we trade, we call it the QMR, Quasimodo Reversal, QMR, right? Quasimodo Reversal. Quasimodo Reversal. We also have Quasimodo continuation, right? Which is a Quasimodo continuation, yeah, QMC, Quasimodo continuation. Now, please take note here of everything I'm telling you guys now. So it came out Quasimodo Reversal. Basically, you see, price is actually. Who is trying to log into my? Sorry, please. All right, so Quasimodo reversal, yeah, how do you use it? In my own term, basically, on a normal day, this is how we were taught to just use the Quasimodo. You know, they say when you have something like this, when you have this here, then you trade. You see this line here. That's the origin. That is the origin of Quasimodo, right? Which a lot of traders are actually trading. But I came up with my own entry, right? My own entry type. So they tell us to, you know, trade like this, that this is a Quasimodo, yeah. And this happens often. It happens often. This is the basic Quasimodo entry, right? But I came up with this instead, with a better one that you know, it gives more confidence and high probable entries here, which is having number one, a sweep of the previous low. You can actually get a sweep of the previous. You cannot get a Quasimodo without a sweep, which is what makes it high probable most times. Yeah. So first things first, there must always be a sweep, then a break. Now I came up with having it as with having a structural liquidity here, having a structural liquidity. Now you have a structural liquidity, but then now where is the Quasimodo entry? Now this is where it comes in here. Instead of just marking out this line, just like the basic Quasimodo, yeah? Like the basic Quasimodo. Let me draw the basic Quasimodo again. A sweep of the previous low, then a break of structure. So the basic Quasimodo is this. This is it here. And you expect price to what? Come back to it. And boom. Instead, I came up with this instead, yeah? You want to see structural liquidity. And instead of just marking out this line, right? Because most times the price don't come back to this line to touch that line. So I came up with this instead. The order block that failed. And I will explain that for those that don't understand what an order block is yet, right? An order block that failed, that low that price swept, yeah, is the zone where price will come back to. Then what we now have, then we have our QMR. This becomes our QMR that price will come back to and take out. Now, I know some of you are actually confused. Now let's focus on just the QMR, right? Before, you know, before we had everything together, yeah? So let's focus on just the POI. Now let's focus on the POI. Now let's go to a chart example. Oh, before we go to the chart example, let me give you guys one last example here. The bullish structure, you have this, a break of structure. So the last candle in a bullish structure here, it's always the last bearish candle, right? To know your order block here, for your order block here, it's always the last bearish candle open bracket, bullish movement or bullish move. Please pay close attention so you don't get lost. Last bullish candle that's how you find an order block in a bearish movement. Bearish move. And let me explain that on chat. Yeah, on real chat. So let's come to DVP USD. Right, let's use the one hour time frame. Now it's on any time frame, yeah, you should understand that price is very, very fractal. If I go to the weekly time frame, I'll see the same thing. If I go to daily time frame, I'll see the same thing. And look at it on the weekly time frame now. Look at this. This is the basic. Look at this now. Now, first things first, we can all see a sweep of this low, yeah? Then we can see a break of structure here. Now, this sweep here, can we see the order block? We can see that price took out this order block because obviously, yeah, this is the obvious low that price swept, and it is an order block because it is the last bearish candle. Obviously, this is the last bearish candle, yeah, but this is the low that price swept initially. Please don't get lost. Just pay close attention to this. This is the candle. This is the low that price swept, that price took out. Price didn't take out these lows. Price took out all of these lows, but this is the actual low that price took out. And if you look at this closely, this is also an order block, right? You can see that it looks like a doji candle and all that, but it's actually an order block, right? It's a candle on its own. The price took out, and look at what eventually happened. We all know that this is what? This is structure, right? Sweep, break, right? Then we expect price to come back to this zone. But where exactly within this zone do we expect price to come back to? That is where the POI comes in. Now you can see we have this specific guy waiting for price to come back to it. Now what eventually happens? Boom. Look how price came back to it and bought up from there. You can see we now had a specific zone for our entry. You can see price came below this zone. Remember we said we don't want to trade. If the trade is actually here, we actually want to ignore it. We want to focus on this zone here. You can see our price came back to this specific point of interest, which is our QMR entry. Don't worry, I'll still break it down. Just relax. I'll still break it down. But you can see, and this is on the weekly time frame, you can see our price came back to this specific entry and boom, we had this buy. It's not random. Yeah, it's not random. Now you can see that. You can see everything on our checklist played out. We needed price to, come back to the discount zone generally, yeah. This is discount zone. Generally from this swing structure, we know this is a discount zone, yeah. But where exactly is the zone we actually want to focus on? Then we came up with this again. Where that break of structure started from, yeah. We want to focus on this low instead of here. Whatever happens here is actually liquidity. So we want to focus on this zone instead. But within this zone again, where exactly do we want to focus on? That is where the POI comes in, the point of interest. Now, that point of interest is either the most recommended one is actually the QMR, and this is the QMR, right? The QMR basically is the order block that's failed. When I say order block failed, right? Let's assume we have let's assume this is in a sell movement, yeah. We have this candle, we have this candle, we have this candle. Let's use black for this, and let's use black for this as well. Now we know that these candles are actually bearish. That means you want to look for sells. Please pay close attention. Yeah, you want to look for sells. So that means this guy is bearish. Now, and you need a specific zone. You don't just want to jump on the trade, randomly like every other trader out there. Just like on Twitter today, I saw Abby say, told everyone to, sell GBP or buy GBP USD now. And I was like, a lot of people will actually, jump on that trade as well. Don't even know the entry, just jump on a random trade because someone called it, and then you end up losing much more money than that person, even bargain to lose, because you don't understand how it actually works. You don't just get into a trade randomly. Yeah, you need to have a specific zone so you don't lose much more money, right? Because it's actually different when you have a $50 account and I have a $1,000 account, right? I could actually tell you to sell GBP USD now or buy GBP USD now. My own account can actually, handle the loss or the drawdown, but your own account cannot, actually handle it. Yeah. Then someone will just tell you to enter GBP USD now, and you just enter this trade like that now, and before you know it, price will now go up. Price will go up, right? Before you know it, your own account has already blown. The person account is still, in drawdown. Then price will eventually now, move in the favor. And the person will make money while you lose money instead because of the account size difference and because you don't even understand risk management. So this is where specific entry comes in. You don't just jump on trades randomly, right? Because someone just calls it, or because you just feel like, okay, this guy will sell now. You just want to sell like that. It doesn't work that way, right? You need specific areas, specific zones, right? So now let's assume that, okay, this guy's now bearish. So now where is our order block there? We can all see this last green candle here. That is our order block. That last green candle, right, is where you call the order block. That's a specific zone that you expect price to what? Come back to and sell. Now, in scenarios where the order block fails, then price eventually now sells. Please take note, that order block is still valid. Now price will now do what? It now becomes the QMR. That order block now becomes the QMR, and what will price do? Price will come and boom. I hope you are getting it now. Now let's go to a chart example now. Let's say the 1 hour time frame. Oh. We collect DND. Aha. Now let's look at this. Now we can see that, what can we see here? Let's focus on this area here, this particular area. Let's cut price from here. Without too much stuff here, we can actually see that price did sweep this previous low here. Price swept this low, and there was what? A break of structure, right? So that means that this is a swing structure. This low to this high is a swing structure. But we all know where we want to focus on here. We also know that this high to this low is also a swing structure. Now we can see that this low here is within this zone. So that means we can say, okay, this guy is our structural liquidity. But now where is the QMR? Where is now our entry? You can see this last guy on a normal day actually didn't fail at first, right? It didn't fail at first, right? Because you can see price came back to it, gave a little reaction, and then eventually it failed. But you can see it, this guy, you can see this last bearish candle before this move now becomes the QMR. Or you ignore this side, you now say, okay, because this is actually the sweep here, you can see this is now our sweep of the previous low, yeah, and this is our break. Okay, now where is the last bearish candle that price swept? The last bearish candle that price swept before this bullish move, obviously we can see that this is the last bearish candle that price swept here. It now becomes our QMR, our area of focus. We now do what? This is where risk and confirmation entry comes in. Yeah. Now you can decide to just place your entry like that. This is called the risk entry. It goes on the higher time frame. Yeah. You can decide that, okay, since you have this liquidity, you have everything in check, you can now place your entry. And you guys remember we actually caught this trade live. Then you wait for price to come. You wait patiently for price to come. Boom. That simple, you made money, right? So this is basically you just waiting, right? Understanding your PO high. The first thing you actually needed to understand was structure. Then after structure, liquidity. And after liquidity, your PO high. Your PO high is the QM hour. Now, to know the QM hour, you need to know what an order block is. I hope everything is actually connecting now. I believe everything is connecting now, yeah? To know your PO high, you need to know what an order block is. And another block is very simple. It's the last bearish movement, the last bearish candle before a bullish move. The last bearish candle before a bullish move. As you can see, this is the last bearish candle here. So what are you supposed to do? Come back to it and move. So now, compared to those that will just enter their trade from here and say they want to cover this low, or they even, as magicians, they want to trade like this. But you understand that price, and one other thing about order blocks is that some people do say that is where the banks are placing money and all that. All those things are just crap. Just keep it very, very simple. Understand that it is just the last. I don't know who's trying to log into my trading views from somewhere. I don't know who that person is. I have to change my password again anyway. So it's just simple. Just be very, very simple. Just keep the explanation simple. So you'll be able to use it over and over. Now you're able to understand that, okay, this is the last bearish move here, and that's my order block. Fine. I'll either just use the risk entry and just enter my trade there and wait for price to come. Just like this, and boom, you have your entry. It's that simple, right? So I've shown you guys two types of PO high, right? The most effective one, the one I like to use mostly here, is the QM hour. And you guys are actually yet to learn what I use and use consistently, which is the QMR. But to understand the QMR in my own form, right, in my own way, is to understand order block 2. The order block that failed. It's that simple. But we all know that for that our order block that failed, without our QMR to be valid, we need structural liquidity. We need structural liquidity. It is very, very important to have structural liquidity in all the trades. Yeah, it's very important. Let me give you guys one more chart example before I leave. All right, on AUD USD, I think I took a sell on AUD USD. When was it? A very long time ago. I think a few weeks ago. So let me look for that entry. Show y'all. All right, cool. So if you can see what happened here. Let's use now. Okay, let's focus on this one instead. Now you can see what happened here yet. You can see there was a sweep of this low, of the previous high, a sweep, a break of structure, right? And then obviously we all know that what is this? This is actually our setup. This is what we want to see every time, and this becomes our structural liquidity. Yeah. But then to actually make it make sense, we all do something as well. We want to ensure that our entry is within this zone. Now, and this liquidity is also touching the 50% or above it. Now, this actually makes sense, yeah? But now, where's our entry now? In this scenario here, we don't have a QMR because the QMR has already been mitigated. This is originally the QMR, right? You can see our price came back there already. So, but above this our zone here, there's no QMR there, right? There's no QMR here. So what do we use in a case like this, in a scenario like this? Remember, we don't want to trade if our entry is not within the zone. Now, this is a very good example because I know most of you will probably make that mistake, right? Where your QMR is below this 50%, this zone here. And then you think that, okay, let me just take the trade like that. No, it doesn't work that way. The moment your QMR is slightly below this zone, look for the next PO high. That means you have two types of POI, which is the order block and the QMR. The order block alone can be used alone. The order block that failed can be used as a QMR. I hope I'm not really confusing you guys. I want you guys to get this. So in a scenario like this where the QMR, original QMR has been mitigated, that's all right. Now, what's the next POI you're also going to use now in a scenario like this? You can see we have this. So that is actually a very nice structure here. You can see this the last bullish candle before this drop. What do I call it? The last bullish candle before this drop is your order block. And that is now your new PO high. If there is no QMR, this is now your new PO high. And then what validates it is the structural liquidity. Now, what do you expect price to do? You basically just have your short position right there. You cover the high very well. And then set your target. Now it's that simple. Then you wait for price to come to it. Can you see that? And I got this trade live during NFP, before NFP. So yeah, I called this trade live. I called it live, and I think I want to send a template to you guys. Can you see we use the order block in this case? What validated the order block? First is the sweep of this high, a break of structure, and the structural liquidity. It's just too simple. This is all we look out for. A sweep of the previous high, a break of structure, structural liquidity. Now, you can see how the QMR will make sense here. It will make sense when it is below, when it is above the structural liquidity. The moment it is below like this, that means this structural liquidity came to it, yeah? And there will always be another block above for price to, come back to. But if you don't have that and it is right above, this is very, very lovely. And you have your entry there. Now, I'll always prefer risk entry. If I have this setup here, I always prefer risk entry to confirmation entry. Confirmation means you're not sure of that particular zone. And the only reason why you can't be sure of a particular zone is when, let's say on a higher time frame, let's say the 4-hour time frame, you have this sweep and a break. But there is no structural liquidity yet. That is where you can now mark out your QMR. You can now mark out your QMR and do what? You wait for confirmation. Your confirmation basically is looking for the same thing again. On the lower time frame, you look for a sweep of the previous high, a break of structure, structural liquidity, and you're looking for the same thing. Now, instead of you waiting for price to give you structural liquidity here, the moment price taps into that your higher time frame PO high, you can now decide to now scale to the lower time frame and look for the same thing, your actual entry model. I hope that makes sense. Now let me show you guys on GBP USD. It happened on GBP USD. On the weekly time frame, there was no structural liquidity, because if you guys pay close attention, I said if there's no structural liquidity, there is no entry, right? Now let's look at this. We know that this is a sweep of the previous low, yeah? a break of structure. And that means this low is expected to be protected. And this is our failed order block, right? Now, there's no structural liquidity within this zone. And this is also the weekly time frame. One candle here, we take one whole week, one full week, one candle. Do you mean I actually want to wait for one full week before price will even move in my direction? As a matter of fact, price has even been, playing within this zone, and we are still here to see one to 1 hour. Price is here to do 1 to 1 hour. So you mean I have to wait for weeks to make money from the market while I'm actually on a trade? No. So it's just pretty simple. You can see price taps into your PO high now. Into your PO high. You know that, okay, this is a zone where I want to look for possible entries from here. Price now taps into your PO high. It's your responsibility to now go to the lower time frame. Now look for your entry model there. And you can clearly see it here. What can I see? A sweep of this low, a break of structure, structural liquidity, and the QMR. Where's your QMR? Where is the last candle that failed and all that? This is pretty much it. Or you could just use this order block as your entry itself. You can see this is the last candle, the last bearish candle before this bullish move there, and that could be your entry there. You have your entry right there, and you cover the protected low, and you have your entry, and let's see, and boom, you can see price eventually came back to it, and then you had your entry. You can see price came back precisely to that order block, like it was so precise. Can you see that? Even after the whole delay, price was obviously creating liquidity, yeah? But you can see price eventually came back precisely to that zone. Why that zone exactly? Why? It's not random. It is not random. Can you see that? Price eventually came back and boom. In this case, order block. Now you would have made money and left the market compared to now waiting on the higher time frame. So that is why now look at this one again. Yeah, you can also say, okay, this is higher time frame. Now you have your order block as a PO high. You can decide to just take your trade like this on this 1 hour, or decide to now wait for price to tap into it again, and you scale to lower time frame again to look for the same thing. That basically means price tapped into your point of interest. This zone is your point of interest, so you can decide to use that to risk entry or go back to lower time frame for confirmation after price has tapped into it. I hope you guys actually get it, because I'm already mixing top-down analysis with this. I really want you guys to understand PO high, which is the QMR and the order block. Just two basic stuff here. The point of interest here, and I hope you guys actually understand it now. During the next class, I will now put everything together. I've done part of it today already. If you're actually smart, you will see that. You notice that, right? I've done top-down analysis. I've tried to put everything together, but still, I will still take my time again to put everything together during the next session. But for now, I want you guys to really understand our point of interest, which is the QMR and the order block. The order block can be used on its own or used after price sweeps it. It's that simple. This is your assignment. Go back to your chart. On any listing of your choice, any instrument of your choice, I want you to mark out the QMR. Every QMR, don't mark out structural liquidity or whatever. Only QMR and the order block. Order block on its own, QMR on its own. Study it. I want to see your charts tomorrow. Before tomorrow, I want to see your charts. And that will be all. Let me stop recording.